Welcome to the Commercial Property Podcast. My name is Suzi Carter. I am a chartered surveyor. I've been involved in commercial property in the UK for 30 years and I've done hundreds of commercial property deals. I'm here to be your guide through the commercial property market, whether you're an experienced investor or whether you're literally thinking about dipping your toe in the world of commercial real estate. I will be here talking to you about all kinds of things commercial real estate in the UK, and I've also got some fantastic guest experts who are joining me. So please do subscribe if you'd like to follow, and if you'd like any more help or information on commercial real estate, please do click www.suzicarter.com, which is my website, and you can find out all the ways I can help you. So stay tuned for this week's episode. Welcome back to the Commercial Property Podcast, and today we've got a real life investor, one of my clients who has been on my board and is now in my Platinum Club. Nilesh, welcome.
Thank you so much, Suzi, for the warm introduction. I appreciate that. Thank you, and thanks for the invitation.
Great. Well, great to see you. And yeah, Nilesh is a really great client of mine, but has been investing in commercial before he met me as well. And what we're going to do today is just something a little bit different on the podcast. We're going to talk about some real life case studies of commercial deals and a little bit about Nilesh's background and portfolio, because I think it's really important for people to have belief that they can invest in commercial. And sometimes there's nothing like just hearing from somebody who's been there, who's done it, who's bought the t-shirt and can talk about their journey. So that's the aim of today's podcast. So Nilesh, could you just give us a little bit of an intro into yourself, just briefly?
Yeah, sure, Suzi. Thank you so much. Nilesh Rathi, based in Reading in Berkshire. I came to UK back in 2006, almost 19 years now. And over the initial years, I started investing in UK residential property starting from 2015. Have been sort of a residential investor initially for 3 years, and then moved to commercial mixed-use properties completely from 2018 when I first bought my commercial property. So ever since then, I have been enjoying the ride of buying, holding, and adding value to commercial properties. It just is a fantastic world of opportunities.
Perfect. Thanks, Nilesh. And just explain to us why you kind of pivoted from residential buy-to-let into commercial, because a lot of people, I think, are starting to do that now. Obviously, the Renters Reform Bill isn't helping residential. The fact that government is definitely targeting residential landlords. So I think there's going to be a lot of people listening who will be at a point where they're considering commercial. Kind of, why did you make the change?
Yeah, absolutely, Suzi. Many answers to that question, but I'll try to keep that to short as possible. But I think the beauty for me of commercial properties simply comes from the fact that once you buy an interesting commercial property, the day-to-day maintenance on those properties is actually quite negligible. So it is actually hands off once you sort of stabilize the property after purchase. So that is actually a big driver for me, because I have got two daughters to take care of and enjoy time with. And I have got some IT freelance work as well going on simultaneously. So that was, I think, one of the main drivers. In addition to that, what I found interesting is that you can show various types of creativity in commercial deals, which are not possible in residential deals. And by that I mean various asset management strategies by which you can uplift the values of commercial properties quite quickly and quite significantly, which I think in residential it is quite difficult to achieve. And the cash flow required to sort of generate substantial and decent cash flow from commercial properties, you can achieve that with less number of properties, whereas with residential you have to buy in volume to get that sort of cash flow. So various drivers for me, but predominantly I think those 2-3 main drivers I would say.
Yeah, great points. And when you talk about the asset management, you mean more the kind of paper-based type exercises rather than having to go in and doing a big full refurb and or a redevelopment or an extension. Is that kind of what you mean by that?
Yeah, exactly that, Susie. Exactly that. I think by doing various paper exercises, I have been able to uplift values substantially. And yeah, the recent deal, which we will talk probably, it just had a refurb of £3,000, and the value uplift was in excess of £300,000. So with residential, I don't think that that is achievable at all.
Absolutely. And of course, for those of you who are listening, the reason being is that obviously commercial property is valued as a multiplier of the income, the rent, whereas obviously residential is primarily valued on bricks and mortar. So you have to make it look good and or extend it or add a bedroom or whatever it might be. Whereas in commercial, you need to increase the income and obviously reduce the risk as well. So listen back to a previous episode of this podcast if you want that explaining. But yeah, so I totally agree with you, Nilesh, and obviously, and that's kind of it's nice to hear someone else saying that because I extol the virtues of commercial all the time. So tell us kind of what kind of properties do you primarily have in your portfolio?
Yeah, absolutely, Susie. So I actually hold eight shops currently, and then one industrial unit and four flats. So so that takes the total to around 13 units. So as you can see, predominantly I am actually mostly invested in shops, few flats which are part of the mixed use scheme anyway, and they are high street shops which are led to sort of decent covenants, local as well as regional and national. And yeah, I am actually quite focused on where actually I buy on the secondary parade or primary parade for that matter. So location actually plays a key role, and that has been, I think, the driver to ensure that in case the tenant actually disappears for some reason, or doesn't renew their lease, then the location actually is able to drive another tenant quickly. So that has been, I think, my portfolio of commercial properties so far.
Yeah, and obviously if you know there's good tenant demand and perhaps not as much supply as demand, then obviously that is a future proof strategy, isn't it, as you say? So how do you pick those locations? Kind of what kind of process do you go through when you're looking at retail locations? Is there any particular things you look for, or any particular kind of people you talk to?
Yeah, absolutely, Susie. I think there is actually a whole load of detective work which needs to be undertaken before you are actually ready to make that decision. And I think some of those points which come to mind at this stage are obviously the location or the town needs to be affluent, and that will be easily found out by the house prices in that location. So if the house prices in the location are sort of above the national average and significantly above the national average, then obviously it is actually an affluent location. In addition to that, the shops where they are located, they need to have decent footfall. So that people are actually driven to those locations for some reason or the other. And in addition to that, I think you get a lot of intelligence from local commercial agents, which who provide you valuable insights into the location and street in general. In addition to that, what we also tend to do is sort of call the neighboring occupiers, call the tenant themselves if I am actually in the process of buying an occupied property, and get their views in terms of what they think, and why they are confident about the location. So I think it is always good to get a perspective from local occupiers, and obviously see the general trend in the property market in that location as well, in terms of how the prices have been actually reflecting over years, over a longer period of time. So that is, I think, the approach in a nutshell.
Yeah, there's some fantastic points there. And this is why I kind of advocate niching, because obviously the fewer times you have to do that detective work, and the more you understand your investing locations, the easier it is to stack deals quicker, isn't it? And B, to get some good deals over the line. So definitely something uh, for everyone to make notes on. So should we talk about a couple of your deals in particular? I think we'll talk about those, and then we'll kind of talk about kind of how you're funded, etc. So you did one in, is it in London, with a betting shop? Do you want to kind of tell us kind of a little bit about that one?
Yeah, absolutely, Susie. So this deal was actually done a couple of years ago, and this was probably during COVID times when I was sending lots of direct-to-vendor letters to commercial landlords, and this was my first direct-to-vendor deal, William Hill betting shop with a one-bedroom flat above in Zone 5, London. Yeah, the seller actually was just disposing his portfolio, and I actually my letter actually went to the vendor at the right time, and then eventually with little bit of negotiation to and fro, the deal was agreed. Not directly with the vendor, but via their solicitor. So I was negotiating with the vendor, solicitor, communicating with them, and came up with my offer, and then obviously we agreed to purchase that, and it has been it has proved to be a fantastic deal actually. William Hill. On the ground floor, paying decent rent, and the one bedroom flat above, which is generating decent rent as well.
So when you, correct me if I'm wrong, but I think when you bought it, William Hill, or the bookie William Hill, I think it was, wasn't it? Who they were coming up to a lease renewal, were they? And you were considering doing like a conversion, but kind of explain kind of maybe how you did that piece of asset management.
Yeah, absolutely, Susie. What happened was the William Hill lease was expiring just, I think, in 12 to 15 months' time. And it was obviously early for me to negotiate the lease with William Hill at that stage. So what I sort of happened to do at that time, and that was actually by sort of careful, meticulous planning, is to apply for permitted development to convert William Hill shop into keep the shop, small shop at the front, and have two studio flats at the back. So that was the design which my architect came up with, which I was quite surprised with, because getting two studio flats and still keeping a small shop, I couldn't imagine that. And eventually we applied for permitted development, and as soon as we applied for permitted development and the sticker went in front of the William Hill shop, I got a call from the acquisition manager of William Hill, trying to understand what I'm trying to do, etc. And that got us chatting, talking, and we went into negotiation for lease renewal, and they expressed quite a strong interest in the lease renewal, and eventually they agreed on my rent increase, which was actually 33% rent increase as compared to what they were paying previously. So I was able to change the rent from 15,000 to 20,000 per year, and yeah, that just on commercial finance improved the valuation by 100K actually. So which I was actually extremely surprised of, and that was my first probably first bigger impact on asset management of a commercial deal.
Yeah, brilliant. And some really key points to pull out of that deal. I suppose the first one was that I presume you bought it in the knowledge that there's a lease expiry coming up, so that will have affected the yield, and obviously the risk profile of the fact the tenant could leave, that will definitely affect the valuation. So obviously you probably bought it at the well, maybe from there on in, at the peak point of where the price was going to be suppressed, because obviously it comes with more risk. And then second, your genius stroke of applying for, which I presume you'd have done. I presume you'd have done the permitted development conversion, but obviously that brought the tenant to the table. And a lot of these blue chip tenants, they really try and play hardball. And so I imagine that you would have had quite a difficult negotiation on your hands if you'd approached them and just asked for a lease renewal, because they would have tried to get their pound of flesh, because that's what they're tasked to do. That's their job. These acquisitions teams and management teams that are the tenants. So for them to come to you and want to do a lease renewal is obviously is a good thing, and obviously that value increase off the back of it. So yeah, well played on that one for sure. And that's a great lesson for, if you are dealing with brands. Is there any obviously always speak to the tenant first and see if they want to stay, see if they're trading well, look at their accounts. You can quite often look at it, whether you did this, Nilesh, but you can often look in the staff room, and quite often they forget to cover over their sales and their turnover, and they even have rankings with other stores and stuff. I don't know whether you did that before you went in.
Uh, yes, Susie. Not exactly in the same way, but in slightly different way. I actually use a virtual assistant who actually does all of this fact finding for me. And the virtual assistant, actually what she did was she called the staff of the shop directly before the purchase, and she found quite a lot of useful information from the shop. So we tend to do that before all the purchases, actually, in terms of finding at different times with different people, because the staff may rotate over sort of days and sort of times of the day. So the same virtual assistant used to call at multiple times to gather different intelligence, and that made us quite confident, because I think from what we got in terms of insight was quite encouraging, that William Hill are trading quite decently from that location.
Yeah, great point and great strategy. I mean, you can obviously do it by phoning, or you can do it by popping in at different times, seeing different staff members. I've done it so many times. You get them chatting, how's business, and you either get the woes of the world in terms of how terrible it is and how there's a roof leak and how miserable it is, or they'll be like, yeah, actually, it's all good. We're doing well, So yeah, it definitely gives you a good a good barometer, doesn't it, as to how they're doing. Yeah, so great tips there.
This episode is brought to you by Bond Finance Limited, your trusted partner for commercial property mortgage solutions. Are you an experienced residential property investor about to diversify into commercial property, looking for funding options? Bond Finance can help. Whether you're planning to expand, refinance, or make a major property investment, Bond Finance provides expert advice with access to a wide range of lenders, from high street to specialist. Book a free discovery session today to explore how we can tailor commercial funding solutions to your unique investment strategy. Visit www.bondfinanceltd.co.uk and take the next step in your commercial finance journey.
So let's turn our attention to the most recent deal that you've done, the one down on the south coast. So do you want to give us a little bit of background on that one? How you found what it is, how you found it, and kind of how you managed to buy it.
Yeah, absolutely, Susie. So the recent deal has been actually an post-auction purchase in the market town of Chichester, cathedral town of Chichester. And this was actually in the auction, didn't sell in the auction for various reasons, which most of the reasons I was actually aware of, because I was tracking this quite carefully throughout, and I was registered to bid in the auction as well, but I didn't bid in the auction because I knew for some reason that there is no sort of interest on the property, which allowed me to buy it post auction at reduced sort of purchase price. So I was able to pay 50,000 less than the auction guide price. And it was the property actually consists of 3 shops and 2 flats above, and there was no party who had visited the property during the auction marketing period. Uh, it was simply me on the viewing day, which made me quite confident about the purchase. And it was both the flats were completely renovated by the vendor last year. Everything was brand new. Only that could be found out by visiting the property, which no one had done. So I had upper hand on that anyway, and yeah, it's proving to be a fantastic deal actually. Throughout after the purchase, purchased end of October, using investor finance, own funds, and bridging finance, which was secured from a private sort of lender who I met in one of the networking meets before. So he has been funding multiple deals for me. It has been a great business relationship. And yeah, essentially we did title split of the property, got two flats split on different titles, got buy to let finance on that, and that finance along with some top up investor funding was able to pay off the bridging loan in just 4.5 months. So that was quite an achievement actually, paying bridging quickly and releasing substantial cash from the flats.
Perfect, great. So let's talk about the commercial, then we'll talk about the numbers if that's okay. So I mean, from what obviously you and I have worked quite closely on this one together. Do you think it was the fact that one of the units, there was 3 commercial units? Do you think that the fact that one of the units had been on the market for a very long time was kind of putting investors off the property?
Yeah, absolutely. I think that was one of the definite reasons, Susie, why the demand for this was actually quite less in the auction and before the auction. And yeah, our discussions throughout this sort of auction helped me to sort of find out what it will take to sort of let this shop and eventually apply various techniques to make sure that I am not scared of that. And yeah, we also I also remember that we worked out numbers on this deal before the auction in our Platinum Club meeting, and that has been instrumental to boost my confidence to eventually go and buy this. And what I found interesting, Susie, in that same Platinum Club meeting, one of the other attendees had local insights of the town, and he shared his insights, and that gave me more confidence actually, because seeing from a trusted person that he sort of likes the location, admires the location, that gave me lots of confidence. So it has been an interesting sort of journey with your support to get this acquired.
Yeah, brilliant, great. And I remember going through the numbers and thinking, you know me, I always like to pick holes in numbers, but I just couldn't pick holes in this one, and it's definitely come to fruition. It's a great deal. So you spent £3,000 on a lick of white paint for the vacant unit. So for those of you who think you have to do a lot of work to commercial, you don't. That just made it look a bit nicer and made a tenant come in and say, I don't need to do anything, I can just literally move in. And so one of the reasons that that unit didn't let was because it was probably on with the wrong agent, wasn't it? So do you want to kind of talk about how, I know that you're still ongoing with that one, but kind of explain kind of what you've done since you've bought it?
Yeah, absolutely. Few tactics, Susie, which we discussed and then I implemented. Firstly, obviously, the tidying of the unit was an important factor. The previous agent who was marketing this shop was and in fact is predominantly a residential agent. So it was in the incorrect hands anyway. So I moved that to the best commercial agent in the town. In addition to that, I actually offered them incentive, which is actually paying them increased fee for letting the shop, which obviously keeps them motivated to sort of act quickly on this shop, and eventually we got 2 offers in relatively quick period of time actually.
Brilliant. So just to break this down, obviously you bought at a good price. We'll go through the numbers in a second. You bought at a good price, so that's what, for me, that is, in 30 years of doing real estate, that for me that is the most important thing, because if you buy at the right price, even if you've got some market slip ups or things don't happen quite as quickly as you want to. Obviously, the likelihood is you're going to make money. So that's number one. Number two is that you had insider knowledge because you'd actually done a viewing and lots of people hadn't. So you knew the flats were lettable, and one of the flats was vacant, wasn't it? And you let that pretty quickly to a local residential tenant, and then obviously changed agents on the commercial. Did a lick of paint, changed and put an incentivized fee in. And so, could you just talk us quickly through the numbers in terms of what you bought it for, what the rent was when you bought it, what the rent is now or will be when this property is let, and then what your kind of revaluation price has been?
Yeah, absolutely, Susie. So when I bought this back in end of October 2024, the day one rent from the entire property was just around, I think, if I still remember that right, 45K. So for roughly around 45K was the sort of overall rent. And then obviously after the entire letting, which includes letting of the shop which has been already tenanted and the empty shop, the rent, overall rent from the property increases to 78K, 75 to 78K in that region. So substantial uplift, as you can see, and that has actually helped in the valuation as well, based on the rental income, sort of, which has been substantially increased because of letting of the shop and the flat actually.
Yeah. So you've added 300,000 to the value, is that right?
Yeah, absolutely. Yeah. So, interestingly, the overall purchase price, Susie, it came out with everything around 775K. So the purchase price was 700K. By the time you add stamp duty, lender arrangement fees, lender interest payments, and everything combined together, that went to around 775K. And the valuation for the entire property after title splitting, it has come to just around 1.1 million. So just over 300K uplift, with just 3,000 pounds worth of renovation.
Fantastic. And I think if you can't get a better example than that, I don't think, of doing paper-based exercises, £3,000 worth of a paint job, and pretty much all money out, 6 to 9 months. I guess you'll get all money out on that one, and you can go again. So, yeah, great deal. Congratulations again on that one. It's a really, really good one, and hopefully for everyone listening, it's a really great example of how you don't need to go into commercial property. Sometimes you might want to, sometimes you might have to. You don't have to go into commercial though and plan big reconfigurations. You don't have to convert it all to residential, although again, sometimes that might be the best strategy. But it's about, kind of having an understanding of these asset management, these paper-based strategies, and being able to implement them is where you can get the competitive advantage, isn't it, Nilesh? So yeah, well done on that one. So Nilesh, how are you funding your deals? Kind of, how are you finding commercial finance at the moment? You're working with investors, so talk to me a little bit about that.
Yeah, absolutely, Susie. So, investor finance has been actually an instrumental part of all our purchases since 2016. So I have been actively working with many investors since that time. And over the period of time, I have developed great relationships with many sort of investors over that time. And eventually, most of the sort of initial funds come from the investors, some from me, and probably a bridging lender or a commercial lender. And over the period of time, I have actually worked with multiple commercial lenders as well. So that helps to build a track record with different lenders, and it just makes it easier to get commercial lending as well over a period of time. And sometimes a deal may not be interesting to a lender, but it may be interesting to another lender. So obviously, that just keeps your options open. And that's pretty much it. Once we obviously purchase, add value, and refinance the property. The funds coming from the refinance are used to pay the investors back, and pay the bridging loan, and then obviously keep going. Just follow that model really. Yeah.
Yeah, lovely, nice and simple, but really, really, really effective. So, what's next, Nilesh? Kind of still building this commercial portfolio. Kind of what kind of product are you looking for?
Yeah, absolutely, Susie. Still quite hungry to do more commercial deals, and yeah, started looking at some large size deals now. So what I have found is, after my involvement with the Platinum Club and the board, the mindset has actually changed, and I have been since last year towards sort of summertime, started thinking of bigger deals, and auctions are quite interesting and quite a preferred approach for me in terms of purchases. And in addition to that, we are also tracking the open market to buy interesting deals. So nowadays, I'm mostly looking for sort of multiple units under the same roof. Multi-unit freehold, mixed use blocks are actually quite a preferred at this stage of time.
Yeah. And at the moment, that's a great strategy for getting finance as well, because lenders like that type of product, don't they? So this is about kind of tailoring your strategies to push at an open door as well. Like, don't make life too difficult for yourself. And mixed use, multiple multi-let properties are really attractive to lenders at the moment, just because it reduces their risk as well, which is why you can get better lending terms. So that's pretty good. And obviously you've gone through my board. You're now on my Platinum Club. It's been great to work with you on both of those, Nilesh. Kind of what have you gained, as you said, like there's been a mindset shift onto bigger deals. Kind of, yeah, what have you kind of gained from being in that environment?
Yeah, absolutely, Susie. Many gains actually for me by getting involved in your board and the Platinum Club. I think if I reflect back on last year when I started the board in January 2024, the important thing is I turned up to the board meetings, which are physical meetings every month without fail, and that just gave me time away from the IT work to make sure that I am actually surrounded by the correct people with actually high aspirations, and that one day actually made the entire difference in terms of lifting up the mindset slow and steady over a period of 6 months, in which I attended the board, followed by the Platinum Club. And I think in reflection, what I also found, Susie, is that in various board meetings, you actually in addition to commercial properties, you actually spoke about various mindset related activities, various books which might help in the journey forward. So I have been actually religiously following many or most of those sort of advices. And that has eventually actually over slow period of time, I think it has creating an impact. And suddenly the mindset shifted, and I think reflecting everything looks like the board was actually a starting point, the catalyst to make that happen. And I quite enjoy the Platinum Club meetings as well, with great people surrounding yourselves in the meeting, and we discuss quite valuable things in the meeting, which just keeps me inspired to keep going really.
Fantastic, fantastic. That's really great to hear. So I'm really, really pleased you've got the benefit, and the sky's the limit. So, Nilesh, thank you so much for joining me today. And I know you do work with investors, so if you, we will put your contact details at the bottom of in the show notes so that everybody's got it. So if you want to get hold of Nilesh and talk to him about working with him, or you've got any nice deals that might suit his what he's looking for, then do get in touch with Nilesh. And anything else you'd like to say on that, Nilesh? I presume you're happy to take calls from potential investors and talk to people about that.
Yeah, absolutely, Susie. Quite happy to speak to any potential investors. But for that matter, I think if anyone wants to just call me and have a chat, and just see if they are exploring any commercial property, and if I can help in any way, quite happy to chat. But yeah, it has been an instrumental sort of journey, Susie, under your guidance, and I can't thank you enough for all the help at the right time, which is actually making a contribution and difference to my commercial property journey. So thank you so much, Susie, for being a mentor of us, and guiding us in the right direction.
Oh, that's really kind. Well, thank you so much for saying it. And, genuinely, I just want to help people. So I'm really, really pleased that you're moving forward so well. So thank you so much for joining me. Check out Nilesh's details in the show notes, and also check out how you might be able to join the board as well, because we have programs every 6 months. The next one starts in September 2025. We are taking deposits. We're actually half full for the September meeting. We may end up putting another one on, actually, because we've had a lot of interest. But yeah, if you're interested, feel free to book a call with me. I'm really happy to speak to anybody, as Nilesh said. And Nilesh is obviously really happy to talk to people about his journey, or to kind of guide people as well. So Nilesh, thanks so much for joining me.
Thank you so much for your time as well, Susie. Appreciate that. And thanks for the invite. Thank you so much. Have a nice day.
Pleasure.